Welcome to Realcast, the weekly roundup of the real asset markets. We're joined live here today by Oliver Kummerfeld from Schroders Capital and Nicole Dines, because we've been running a session here at Schroders Capital focused on some of the key trends around ESG, digitisation, technology, innovation, and also how that plays into the investment side. But let's pick up, I guess, some of your takeaways from the event here and also any stories from the week, Nicole.
Well, I thought it was there were some very interesting points made about the difficulties of implementing ESG. Christian Conrads of PwC pointed out that regulation is already high, and she called it tsunami of regulation that's going to come in the next couple of years. So people really have to, brace themselves and try and act as soon as possible. I think that's basically the key message. Do not delay because of economic circumstances. Jules Barker of Wired Score was saying that a lot of people are saying, economic circumstances are difficult now, so that will delay investment. They really cannot be delayed because there is a real risk of stranded assets. Another interesting thing, he said that ESG should have an R at the end for resilience, because the issue of climate change and the impact it has on buildings and their resilience is really coming to the fore, and it hasn't been really taken on board yet, even though obviously events are in the papers every day. We've seen Italy last week with the floods. There's going to be more and more floods, and Christian Conrad is saying there's studies in Germany saying that most of the infrastructure is just not ready, not suitable for this kind of climate events. So that's a serious issue. And on the technology side, again, a lot of people think technology will help, which obviously it will. But again, Jules Barker said it's not going to be, we're not going to be a silver bullet solution tomorrow. So don't just sit back and wait for something that's going to solve every problem. The technology is already there. All the technological solutions we need to solve the problem are there. They just need to be implemented and implemented at scale. So that's the real challenge. I thought it was really interesting. What did you think about the briefing?
Yeah, I found it really helpful. I found it very refreshing as well. Christiana pointed out that, in terms of the standards and regulations and reporting that is out there, it's a very diverse landscape, but it can be actually overwhelming. I think a lot of people in the industry sort of feel that they are looking for guidance. But what I also liked is the conclusion from the panel that you have to do ESG, you have to implement it into your investment strategy. It's absolutely crucial to protect values, and that basically most investors or participants in the market sort of recognize the value sort of an ESG strategy has to protect your value in the future. It's basically something you can't really live out with.
Yeah, and we had interesting sessions also in Frankfurt, one on debt finance and investment, and the other looking at ESG, but from that kind of development, redevelopment side, and actually how you kind of try to keep yourself and your assets above the pathway. So some really interesting areas around that, but also climate resilience coming through very strongly in that. And in the debt side as well, the view that, yes, you've got the, which of course at Schroders you'll be covering a lot in the research side as well, there's that funding gap at the moment. But also then, because we just had the session around ESG topics, you've also then got potentially another funding gap arriving, which is to do with potentially assets that are stranded and there just isn't the money or the equity in there to do what's necessary. So some really interesting things coming through, I think, Ollie. And in terms of the news, were there any sort of pickups that you've got from anything that you're tracking from a research point of view?
Yeah, I mean, the markets are still obviously very much looking at what's happening on the macroeconomic front. We're looking at inflation, which is sort of one of the overriding topics. And I think it was very disappointed for a lot of investors to get the reading from the Bank of England that inflation in the UK has actually been above target again. And we had to basically make a very short notice change to our house view, upgrading our outlook for the Bank of England's sort of target rate. So we think now that we'll have to see probably at least 2 more 25 basis points increases in the policy rate. And that can obviously have an impact in the market in terms of pricing. It has the potential to put pricing for UK real estate out a little bit further. It has the potential to sort of delay the recovery. I think the UK market has actually done okay-ish. We have seen a lot of funds that had redemptions that created market liquidity and new pricing points. But again, this kind of news that the inflation target was missed again, I think will have a disrupting sort of impact, at least on investor sentiment.
And in terms of the certainly the sense in in Frankfurt was we may also expect another 2 kind of 25 basis point rises as well from the ECB, but then hopefully that will be the kind of peak of the cycle.
Yes, absolutely. I mean, the ECB has made it more than clear in the communications, if you watch sort of the press conference and read the transcript, that fighting inflation is absolutely at the core of what needs to be done. And at the moment, we are still in a situation where labor markets remain very, very strong. We see sort of wages growing, and that's all sort of, not really helping with bringing inflation down. So I think we are, still at a very critical point for the outlook to see if we can bring inflation down, if we can capture it, because if we don't, then I think we really have massive problems in the future.
Great. Nicole, any news stories from your side?
Well, on a positive note, we often talk about all the dry powder that's out there. There's still a lot of interest in real estate despite all the macroeconomic sort of challenges. And one example of this is the London Borough of Kensington and Chelsea. The pension fund is spending hundreds of millions of pounds investing in commercial property in the UK. Anything from Morrison's supermarket to a Travelodge to an Audi showroom. It has quadrupled its allocation to real estate from 5% to 20%. That's very much against the trend, but hopefully we'll be a pioneer and more will follow. So that's a good news story.
Yeah, it was interesting to see as well in Frankfurt in terms of the debt side. There was a very big focus on NPLs and also what may be happening there. And again, a lot of capital on the sidelines waiting to be employed there, which is an interesting one. But also quite a positive take from that as well, I thought, particularly from Norbert Kelmer from Berlin HIP, saying that versus the last time there was a significant issue, that actually everybody's treating it in a very professional kind of way, and that there's now much more kind of collaborative approach to making it a solution for everybody, both the lenders but also the equity holders as well. So I thought that was interesting to see.
Yeah, I can see that in the market as well. It doesn't look to me as the banks are very aggressive. I think they're not very keen to take on assets. They are much more willing to sort of show some flexibility on loan terms. And overall, actually, I don't see that much distress in the market. Maybe yet, but at the moment, I don't think there is a lot of distress. The occupier markets remain fairly healthy. So tenants in the building pay their rent, the income is coming in. And as long as that is the case, I think the banks are less nervous about what's going on.
And on a positive side, just to end as well, for the first time, I think, well, certainly in a number of years, I've had, I think, 5 conversations over the last week, which have all been about retail and the fact that actually there's suddenly a little bit more interest in retail, which may be a reflection of the fact that retail is already at the bottom of the market in terms of people's perceptions. But just interesting because nobody has mentioned that to me for some time. So that was interesting to see. Thanks very much, Ollie. Thank you, Nicole. Thank you for joining us, and look forward to seeing you next week for our regular roundup of the real asset markets.